Wednesday, September 27th, market analysis. Stan Ehrlich, good morning. 9:51 California time, right in the middle of the trading day. We always start out with stock market indexes, go to futures, sometimes then sectors and forex and even crypto. Today we'll do the same, and we're starting out with the S&P 500 December futures contract specifically, and then we'll go to SPDR, DIA, QQQ, and so on, and then a Russell. You guys know by now, we've been talking about this head and shoulder top for weeks and weeks, a couple of months. Since the major bearish engulfing signal on July 27th, that's the Ehrlich reversal, automated trading system picked the top of the market in many of these indexes, again on July 27th. So after this, we have developed a last shoulder high, and that was on September 1st. And I've added a little bit more markings so that it might be easier for some people to see that aren't used to looking for head and shoulder patterns. And you've got the large shoulder, but it's actually two pieces on the left here, and that would be June 16th rally high and June 30th. So in June, the shoulder, and it's a double high or double top at the time formed. Then we've got the top of the market, July 27th, key day. We also, by the way, picked the bottom of the market back on October 13th last fall, a year ago. So after the top with bearish engulfing, three of them, one of them is the highest high, and that's why I developed this trading system. We have another set of rally highs, and that was the September 1st and the September 15th highs. But there was a little bump here on August 24th in the process of developing the last shoulder, making this last shoulder all by itself a small 3-week head and shoulder top. Yes, there's a head and shoulder top inside the bigger head and shoulder top. So the small 3-week one broke out to the downside classically on September 15th and only took 1, 2, 3, 4 days to go down to its minimum downside objective, which is about 4,398, give or take a point. And that happened. And now, about a week ago, we started to get into overbought conditions as we were breaking below the neckline of the bigger head and shoulder top, which we are still involved in going down. I think to 4,110, that's my minimum downside objective, and I use the word minimum. It can go further than that. These patterns produce sometimes much, much bigger moves than the minimum expected. But in this case, I think that's going to be about it, and we'll turn back up again after the October lows again, which I'm going to show you in some detail in a few minutes. You know, 90% of the last 30 years, we have had a buying opportunity in the calendar month of October. There have only been 3 examples in the last 30 years where it was late September or early November when the market had a low of some sort and turned up. So why not again? Coming right around the corner next week, October. So obviously starting to get oversold here, or very oversold, I should say, leads me to believe that we are about to have a bounce now, maybe back up to the neckline about 43.85 for the E-mini, and then turn back down to finish the job during the month of October. And it could be the first day, it could be the last day. I'm going to come up with a number here, and it's October 10th, 10/10, and see how close I get to the exact date that it turns around, hoping that it does, of course. So I'm looking for 4,110 on 10/10. We'll see what happens. But in the meantime, I do expect a little rally for a few days, several days, and then back down for a couple of weeks in October. Okay, let's go to the next chart, which is going to be the SPDR. we are almost closing a gap from way back on June 1st. Now, I'm fully aware that as the decades have flown by, and I've been at this 52 years, the tendency is for markets to be 24 hours a day, 366 days a year, and they'll figure out how to add the day somehow. So the gaps are going to disappear eventually, and markets will never close. Hence, a lot of futures contracts only on the weekends and forex on the weekends. And you got pre-market and post-market and all that. So the gaps are fading away. It's been a very, very useful tool of mine for decades. And it's still useful as long as the gaps exist. And so we're almost closing this gap, adding to my very significant expectation that we're about to have a little rally. And it should not be any higher than the neckline, which is the red line here, slightly upward slanted, and then down further into the month of October. Okay. What about the NASDAQ futures December? It has not yet broken out. We are at the bearish support line, which is the neckline of the head and shoulder top. And this is a classic spot for it to bounce a little bit. Not too much, though. And that's exactly what I expect. I'll pull this little downside objective line over to the right slightly because we haven't yet broken out of the pattern. And that's how you measure the downside objective, which should be 13,280 on the NASDAQ, December futures contract, which I think will be alive when it gets down there and then back up again after the month of October and hopefully reaching again 13,320-ish. Okay. Next chart, we got the DIA. It has already broken out of the neckline and been going down here for a few days straight, looking real good. So I'm expecting to see significantly lower levels in the next week or two or three, or maybe even four-ish. And the downside objective is 323.5 for the DIA, which is already approximately 50% of the move down. Wow, already. So, in now, a little bit of support. Again, there's a variety of reasons here, support levels, etc., gap closures, things like that, to lead me to believe that there's going to be a bounce very soon. It might start today. In the last hour or two, we could have seen the low. I can't tell. The Russell 2000 has a gap above the market to close. It's well below the neckline, so that would not be a problem to rally back up and close the gap and then turn right back down again and get to the minimum downside objective for the Russell 2000, which is approximately 166. As this formation continues, and so far it's been extremely good and accurate and not throwing many curves to speak of, I will detail my expectations day by day, and we'll see how this goes. So the S&P spider, as you can see on this 1 minute chart covering approximately 6 days, 6, 7, has been just chewing its way down. And of course, the same thing basically for the December futures contract on the E-mini. But you're only looking at about 2 days here because there's much longer trading hours. The Russell 2000, just like the others, chewing its way down. Okay, I'm going to go now to the October lows. This is why I am so expectant of finding another low in October. This is a weekly, no, I've changed it to a daily chart for the S&P 500 spider. I'm starting at the beginning of the history of the S&P, 1993, I believe, October 10th. There was October 8th. There was a low of some consequence. It wasn't that big a deal, and market was pretty flat back then, trading at what, 46? Yeah. Okay, next year, October 9th. Then October 10th, 1995, October 29th, October 28th, October 8th, October 18th, October 18th, again, the exact same calendar day. So let's move to the right a bunch. 2001, October 21, September, sorry. This is the first time that it was occurring a little earlier than the month of October. A very, very sharp deep low right here, and a very nice rally out of it. Now, some of the rallies out of October don't amount to much, but most of them are really, really good. Okay, October 10th again, 2002. October 1st, 2003, October 25, October 14. And let's go and slide everything to the left. And we've got October 3rd, 06, October 22, October 10, October 2, October 4, October 4th again, October 26. You get the message? And now we're almost real time. October 9th, October 15th, September 29th. That's only the second time now that we have a low not in October. And the next year, 2016, we have a November 3rd low just outside of October. So that is it. Those are the three, 2 Septembers and 1 November that don't match up with October. The next year, the 17th, October 25, 29, October 3, October 30th, and in the last couple of years, October 4th. And last year, what a whopper. October 13th with a bullish engulfing ER buy signal smack at the bottom of a large head and shoulder bottom formation. And now look at what we're doing this year. We're just coming down nicely from this head and shoulder top into almost October next week. Well, we only got to wait a few days more. And this is my bullseye. I'd love to see this on approximately October 16th, hit 406, 407. That's my number, and that's my date. Let's see what happens next. Now, futures. Of course, the E-mini is a futures contract, but as well a stock index. And I'm looking for about 4,105-ish for the minimum downside objective on this pattern, which is obviously well underway, doing great. But it's approaching and now just barely getting into this area of support. So I'm expecting a bounce any moment, literally. I think it's going to start this week, and it could be today. Not for more than a few days, at the most a week, and not really that much of a bounce. So now NASDAQ, we're at the neckline, and this would be a perfect spot for it to bounce some, as well as a little bit of support. A couple of lows way back here in May and June. So there's reasons for it to bounce, which it hasn't really started to do yet, but we'll see. Next, the bond futures markets and the 10-year notes are continuing to make new lows, which means it's implying that rates are going to go up, and the stock market doesn't really like that. One of the reasons why it's going down. But I'm not looking for a lot lower in the interest rate futures, 30-year long bond and 10-year note charts. And here's the 10-year notes. I'm looking for more or less of a bouncing back and forth, bottom building type of activity to start fairly soon. It may take the form of a specific type of formation, but that's too early to say at this point. But very oversold conditions for approximately a week are the beginning of a rally very often. Next chart, crude oil. Well, I thought it was topping out, and it just screamed bloody murder straight up today. New high ground, getting overbought significantly again. Anytime indexes or markets, symbols, instruments, whatever you like to call it, gets into the 90 area for the RSI, and this is my custom RSI. I learned RSI from Wells Wilder himself. I don't have the same time frames, and I plot it a lot differently. But for all practical purposes, it's very similar. And you could use stochastics, George Lane's, and he was an old friend of mine as well, oscillator. as well as RSI. They're similar in a lot of respects. I like RSI. So the ER-RSI is available. The ER1 signals and ER3 signals, or the RSI, the ER signals in general are available for TradeStation and Ninja. So here we are, overbought. I think it's about to top out. I said so the last couple of days, but proven wrong today. So I'm waiting for a moment or two and see what happens in the next day or two. I don't think we're going to be going up much more. Looks to me like it's probably very, very close to a rally high. Next chart is heating oil. A little rally in heating oil, which has already started to work its way lower, but it's entered a little bit of support and rallying today. The trend is obviously still up. I thought we would get back down to about 3.0 and maybe even a little lower than that. I still do, just because of one-day rally here. I am not changing that minor downside correction and a bull trend, eventually looking for higher levels, probably in October, soon. So I'm bullish, but I thought we'd see a little more downside correction. Next, natural gas. What? A nothing. I mean, it's been going sideways since April in a relatively tight sideways trading range with no breakouts and simply acting like a ping pong ball going back and forth here. So until breakouts occur or something happens to cause me to scream bloody murder, bullish or bearish, I'll just shut the heck up. Gold, new lows totally. But for a first day now, oversold on a big down day. Approaching support. I think we're about to start to bounce back up again, but this time it's going to stop around 1,920-ish and probably turn down again after that. So I'm looking for a bounce and a bear trend and then lower levels. Same thing for silver, but it hasn't crashed into new lows quite yet. It's come down into the support area again. Every time it's bounced out of the support area, for the most part, it has bounced to a lower and then lower and then lower level since the double top, which has, yep, 2 ER sell signals on the 2 highest highs on the double top. Great combination of signals. We also got the bottom of the break down on March 10th. We also got the bottom of the break here on May 26th. And we got the top of the market to the day on July 20th and a complementary sell signal a few days later. We got almost the bottom of the break here just last month, and we got the rally high almost to the exact day, September 1st. Yowza, we have had a large number of bottoms and tops that we were able to pinpoint with the Ehrlich reversal technique. Silver looks like it's going to break into new lows below the support red little zone here very soon. They're not quite oversold yet, but getting very, very close. So maybe one more sizable down day. And it may stay in the support area and get oversold and then bounce. But eventually, the next few weeks or a month or two, I think we're going to break, and maybe sooner than that, below the red support area. Next chart is platinum. And we today have now come down all the way to the lows in August, where we did pick a buy signal. And it was a great one. Then we got a sell signal just recently on the high of the rally in platinum, September 1st. So I'm looking for lower levels, but we're very close to oversold. We are at previous lows, a support range, and I should put a little red zone in here probably, and we're at the bottom of it right now. I didn't really expect it to drop that much that quick today, so we're at support and extremely close to oversold. Probably a minor bounce before it goes south. More. High-grade copper. Here we go. It is in support. It is yellow. That means it's oversold. And I'm expecting it to rally. Probably not very much, up to 3.7, maybe a little further than that, which is, very small rally. But this is a bear trend, to say the least, for well over well, almost a year now, all of this year, and I don't see any reason for it to stop. Support's going to stall it out a little bit, bounce a little bit, but I'm looking for lower levels and significantly lower levels. Next, soybeans are at the support level 2 days ago and yellow. And it did bounce yesterday and further today, although the current quote is lower on the day by a small amount. Now, I'm not sure quite yet, but soybeans might have a long-term top building. It depends on how it handles the support level, which so far is passing the test. If we see more strength and it's coming up again to 14 and higher above 1440, we're going to have a very big bull market continuing. On the other side of the coin, a close below 1282 would look pretty bearish, and I would expect it to come down to 1070 to test the bottom of this huge trading range. So we're at a point where it's going to make it or break it. Next chart, soybean oil. Trying to break out to the downside yesterday, got oversold, but closed above a little support line. Now, I can call that a neckline because you've got a double top for the head. You've got this possible shoulder over here, which is early July, July 5th. And you've got a rally high on September 15th for the other shoulder. So that is a head and shoulder top with a double head and a fairly wide one. It's not acting, now that we're testing the neckline, like a head and shoulder top. It should do what the S&P and the stock market indexes have done: drop below the line, stay below the line, and drop for another couple of days more, which still could happen, but not yet. So I'm keeping a very close eye on this pattern in soybean oil. Next chart is meal. I'm expecting to test the first support level of 378.80 and probably come down to 364.40. Next, corn. It's going to go the way, I believe, of wheat, which is the next chart, and that would be making new lows again, breaking significantly long-term support, and continuing a longer-term bear market. So after this minor bounce, which I don't think is going to go much further than, say, 490, we're going to stop there, I think, and turn right back down again. I'm bearish, obviously. Wheat, trying to make another new low. We're very close to a new low close. Every rally we've seen lately for many months has failed, and the wheat market since the beginning of the war, which, by the way, we did get a bearish sell signal on the high after a series of locked limit up. That means it opened, stays there all day long and never went down. Locked limit up moves in a row, or it opened, went limit up, and stayed limit up by the end of the day. There's, I don't know, what was it, 1, 2, 3, 4, 5, 6, 7, something like that in a row, and we have a sell signal on the top of the rally. That is as extreme as you're going to get. It reminds me of the Russian grain deal back in the early 70s, the way the wheat market acted at the beginning of this war. The bull market in live cattle is very, very interesting. It looks long-term very, very bullish, but we are quite overbought. Now, this is a weekly chart. Okay, and I did this on purpose because I want to show you something new. I want to turn on an indicator, the Ehrlich Cycle Forecaster, EC Forecaster. Here it comes. And I noticed this rhythm in the market. And we're going to look, okay, just a few more seconds. And this is the instruction manual that pops up, and it's you can turn that off if you like. But look at this, ladies and gentlemen. I've added the little yellow lines from the bottom of the charting area to the low of the price action, and they are always in the window of opportunity, the green bar, and they are 90 weeks. Remember, not daily chart. This is a weekly chart. 90 weeks from low to low, give or take 10%. So that would be 5 weeks early or 5 weeks late, about a month early, a month late. But this is a multi-year cycle. This is pretty damn good. Now, it was a little earlier back here in 2006. On the money, on the money. A little early, but there was a low of consequence on the money. On the money, on the money. Again, early, but again, if you bought during this time frame, and did I say October? I didn't mean to say that. On the cycle low, you would have made very good money. Again, bingo. And another rally that wasn't the lowest low, but there was a definite point in time. Remember, this is a weekly chart, so you're going up for about a month or two here. And now, this week, we were supposed to have a cycle low. It looks like it was a little early, and that is unfortunately very, very bullish for cattle. If you like your, beef. I think I'll turn vegetarian. Not sure yet. Next chart, and I need to put down the, excuse me for a second, and need to put down the cycle forecaster. That's good. Okay, next chart is live hogs. Support, not quite oversold at all. So we might bounce a little, but the long-term trend is obviously down. And I'm looking for a test of 70 and probably breaking below 70 very soon. Next chart. OJ just won't quit. But you know something? This looks like a blow-off top. A blow-off top is an extreme strength situation. It's more than one day sometimes. You've got 1, 2, 3 days here for that one that produced a 2 or 3 week break. This one lasted a couple of weeks also, way back here in February of this year. So this could be another one. Now, the word top implies something much bigger than we've seen. I'm not necessarily expecting just a week or two down because of the levels it's happening at and the way that it's moving. We could see something a lot more profound longer term on the downside. We'll see. Cocoa. New lows, but now starting to get oversold. We have now finally gotten down to oversold conditions. All right, and we're in a support area in general, nothing particularly exact. I think we have a chance of getting down to 3,311 before any significant bounce happens. But now that we're oversold, it could happen at any time. I'm looking for reasons to try to catch the beginning of the next rally. You know, this is not necessarily a bear market yet. We haven't seen any major lower lows for any large amount of time. Every time the market's come down and made a new low for a few weeks, it has survived and gone right back up again. And that's from a year ago. Next chart. Coffee at support, trying to bounce, very close to oversold. I'm not sure whether this is going to break out to the downside, which would be closing below, let's say 147. And that would be a bearish breakout, or we're going to bounce here. So I'm keeping my eye on it very closely. I think we're going to bounce, to be honest with you. Don't have a real high confidence level on that statement, though. Sugar. Got overbought, topped out, slipped back down again here. And this is kind of a tough one. I'm not sure. So if I don't have anything to say that I feel very confident about, I'm going to shut the heck up. Next chart. Cotton, sideways trading range for quite a while with rising bottoms ever since a year ago, November 1st or so of last year. We're trying to push through this resistance level and having some very minor successes lately, but this is the second try lately We could be breaking out to the upside. We're not overbought yet. I'll leave it at that. Back to the E-mini. You have a great day. Talk to you tomorrow.